there. Yesterday we sold off exactly from those levels, so it's a level to watch. Let's see. Let's hope we are able to cross it, and more importantly, trade for some time above it and not selling off. But this is good. 160 points is what we have now. The Adani Group stocks, as we just put out, are doing a little better as compared to yesterday. Enterprises green, both up 3%. Enterprises sold off about 7-8% yesterday. Voltas, I just highlighted those takeaways from the management meeting, 2.5% higher. PNB Housing is up 3%. PNB Housing was down 10%. So some of these moves that you're seeing is basically reversal of what we saw yesterday. And I think you can say the same thing for Bank of India and a lot of these PSU banks, which sold off 6, 7, 8%. Railtel is up about 4% or so. NBCC is higher by about 3.5%. Yesterday's listing, which of course it looked like it would be a good one, but the market sold off, and so it's up. It's coming up, which is Divji, right? I mean, which is up 4% or so, 629. There is Reliance Infra, IOB, a lot of PSU banks, which basically have been the worst performing part of the market for the last 2 or 3 days, coming back up. And I think if you put the Nifty PSU bank index up, you'll see what I'm talking about. Market breadth is very positive. 1650 stocks are higher, and about 200 stocks, less than 200 stocks are lower. So broader markets are in decent form as well. I'll get to more stocks on the downside. There isn't very much backed by volume. So let's welcome in Mihir Vora then, who's with us. He's our Market Master of the Day, Director and Chief Investment Officer at Max Life Insurance. Mihir, great to have you with us here. Thank you very much for your time. How are things looking to you, Mihir? You know, do you assess there is a period of volatility and sort of indecision here ahead of us before a more clearer kind of trend emerges? Mihir, can you unmute yourself, please?
Sorry, good morning. Certainly, because, given the, spate of events that happened over the weekend, the markets will take some time to digest all these happenings. I mean, equity markets actually have been a ocean of calm, I would say, compared to what's happening in the bond markets globally. We saw the 2-year bond yield fall from 5% to 4%. And from 4% last night intraday, it went to 4.30, 4.40. So it's really dislocated as far as the bond markets are concerned. And that ultimately does have an impact on all asset classes. So I think the next big event to watch is what the Fed does in its stance for inflation, because that will have a big impact on the long-term bond prices, the 30-year bond, the 10-year bond. There is expectation that they might ease off. So short term, there might be some relief on that front, but that might actually send the long-term bond markets in a tizzy. So a lot of interesting developments, I would say, in this week and next. So markets would probably be in a wait and watch mode.
Okay, markets in a wait and watch mode. The going is good so far, right? I mean, the market is still holding on to its gains, but does it flatter to deceive? That we will know. For now, it's holding on to the 17,170 mark. It's come off a little bit actually from the highs. So the volatility is already kicking in this morning. It's not able to sustain. The high that we hit was 17,211 and it's come off a little bit from that. Mihir, what do you do with the telecom space? I mean, I'm asking you because, that is the space that the hot topic this morning, right? Rel Jio has raised the competitive intensity in the post-paid plans. What do you do here and where do your preferences lie?
For us, it's more of a neutral play because it's looking like a value play, but then it does not look like a very high growth play. So given that it has some exposure to the benchmark, we're more or less staying neutral in the segment, not taking a big call there.
Okay, so neutral on telecom. Mihir, hi, good morning. So we've got this relief rally. For now, I think bulls are taking it with both hands. You tell us, how to negotiate this from here on. Do you think the worst of the noise has died down, or is it too early? We're still running into a big event on the 22nd with the Fed meet. So how do you start sort of deploying your cash hopefully as the uncertainty and the volatility ebbs?
Sure. So I think we need to look at it from an India-centric view, take a step back and maybe cut out some of the global noise. Globally, it's going to be noisy. And as we have discussed in the past also, our view is that the Indian economy should be more resilient than the global economy. There is much more pain probably out there in the US and Europe because they are not used to 5% yields. 5% interest rates and 6% inflation. So I think there's going to be a lot of gut-wrenching volatility out there in the markets as well as in the economy. But I think if you step back and look at it from the India point of view, if there is a slowdown or a recession, then we tend to benefit from lower oil prices. We are at inflation, which is, well, above 4%, which is our comfort level, but 6% is not something that we have not seen. We historically run an inflation at 4 to 6%. So we are not in an uncharted territory as far as inflation and interest rates are concerned. And if oil prices come down and we continue to see good domestic demand, rural economy recovery, and the government initiatives, then I think India should be okay. Minus, barring massive selling by FIIs, which I don't see happening in the long term.
I wanted your thoughts on the auto space, particularly on electric vehicles, because this theme is now emerging in a big way, right? And a lot of companies, Maruti is getting into EVs in a big way, a lot of auto ancillaries as well. Sona BLW, we saw what's happened with the stock in the last few days. Any thoughts here? Are you raising your allocation towards autos, and this under that overall umbrella, would you prefer EVs?
Yes, in the auto space, we prefer the car space, the four-wheeler space over the two-wheeler space. There's definitely more pent-up demand and traction there. And I've actually, test-driven some of these new EVs, and I'm actually pleasantly surprised at the quality of some of the products out there by the domestic players. So I'd say that the transition is well underway. And frankly, it doesn't matter what they sell, whether it's EV or IC, as long as they make money and margins, we should be fine. But structurally, I think passenger cars and UVs are a good play. Okay,
all right. We'll leave it at that then. Mihir, thanks a lot for joining in and taking us through your view. Okay, just before we end, since you've spoken about autos, any other spaces that you like, anything that we've perhaps missed out on? Because, this is a market, it may be like this for a while, but I guess this is a great hunting ground for long-term value and growth opportunities as well. Apart from autos, anything else that you'd put your money to work in? Maybe not now. You could get levels, cheaper, 5–10%. But what would be in your shopping basket now?
I think it would still be domestic financials and capital goods / defense manufacturing segments. I see government continue to be proactive as far as defense spending, defense indigenization is concerned, and the capex spend on railways and roads, etc. And of course, all this, if the domestic economy continues to do well, then retail credit should also continue to do well, which will be good for the private sector financials. So domestic is the theme to go, I would say.
Okay. By the way, I just want to point out the market is slightly off the highest levels of the morning. 114 now. I mean, we started with this 200-point gap up, and that's a familiar slightly downward sloping line, right? So let's see how it plays out very, very early. Right now, there are only 1 or 2 Nifty stocks that are down by over 1%. Bharti Airtel is one of them, and then there's SBI Life. Everything else is still positive, but perhaps we need to watch the screen very, very carefully. Okay. So that's the market for the time being.
Just want to mention one stock. I don't know if you guys are excited, but I'm very excited with PVR and the expansion plans that they have. They're planning to add 200 screens every year. This whole concept now is picking up yet again, right? People are starting to get back to theatres, and people are starting to do that every Friday movie watching as well. And PVR has big plans with the merged entity. So there's lots of synergies coming through as well, but there's 200 extra screens, so it's going to be fun.
It's just waiting for better content to come through, really. And going to the movies is.
Do they still have that Friday release, or is now Thursday release? I thought it was Thursday, right? Or
I haven't watched.
I haven't been to the theatres in the longest time, so I guess
you guys are advocating 200 more screens.
I will let the content come. I think the screens are welcome in any case. But Mihir, great to have you on the show today. Thank you very much for taking out the time. With this, we'll move to our next guest and our next conversation. Lawrence Belanco of CLSA is with us to make sense of all of this volatility.